Yeah, I mean, so the major inflation hedges are gold. Gold's kind of a weird one because it can do well in inflation or disinflation. What gold primarily is a hedge against negative real yields. And so that can actually happen in disinflationary or inflationary environments where something like copper, oil, those types of industrial commodities are more inflation hedges. And so even if real rates are positive, if inflation's high, those things are likely doing well, in part because they're often what's driving the inflation. And Bitcoin its own beast. I mean, obviously the past 10 years, the last decade was mostly inflationary for asset prices, not say the commodity index. And Bitcoin obviously was tremendously successful because I've described it as kind of combining gold with the tech stock. And so you have that digital scarcity gold 2.0 narrative combined with the fact that, say unlike gold, which is going to be the same 10 years from now in terms of what it is, the Bitcoin network is better now than it was 5 years ago. And unless there's some sort of catastrophic tail risk, it'll most likely be better 5 years from now. So there'll be more activity on the Lightning Network. Basically, there's developers every single day working on making Bitcoin better. Kind of like if you own, say, a tech stock, let's say Roku, for example. There's people working every day to build that network out, right? And so I kind of view it like that. So again, Bitcoin is not a pure inflation hedge. It's more of it's a gold 2.0, so a hedge against fiat debasement while also kind of a growth stock in its own right. So it's actually taking market share. So I think generally, if you're going to hedge against inflation, you want to have some degree of commodity exposure, commodity companies, and then how you size that partially depends on what your conviction level is for inflation. And so my overall approach is to have some energy companies, some gold miners. I did have copper miners, but I trimmed them out when they kind of went parabolic there, and then I might add back to them. And so I have kind of that barbell approach where I have some like long-term growth stocks that are I think basically disruptors. They have this long-term compounding effect. And then I on the other side of the spectrum, that's when I have that more commodity exposure or gold and then things like that. And then Bitcoin's kind of in the middle where it's both sides of the camp essentially. I mean, I started covering it publicly back in 2017, and it was that euphoric price run up. I passed on it. It crashed, it consolidated. But basically, some of my initial concerns were addressed. So we saw the resolution of the hard forks. We saw the solidification of certain network effects, especially around Bitcoin. And so, in early 2020, I was like, okay, now I'm in. I'm pretty bullish on this asset now. It's basically, if you have certain concerns, instead of just being permanently bullish or bearish on an asset, you can say, here's X, Y, Z, why I'm not invested. And then if later X, Y, and Z get addressed, you say, well, okay, well, they were addressed and now I'm bullish now. And so I have been quite bullish now since early 2020. I continue to be so, at least, for multi-year long term. And mainly what I do is I analyze it from a network effect perspective. So I kind of analyze it similar to how I would any tech stock, of course, with the exception being that instead of doing price to sales or price to earnings ratios, you're looking at adoption metrics. You're looking at what kind of development is happening on that protocol. And so over the past, say, 7 months, the thing that's interesting me the most is Lightning, because one of my theses since January is that basically Lightning is reaching a critical mass where it's kind of like a freight train where it's really slow to start, but once it starts, it's that momentum's really strong. And so basically that's a network that it's not a broadcast network, it's a channel network, and so it's really reliant on liquidity. And so it went through this couple-year process of building out that liquidity, building out the basic tools. But I think it reached critical mass where there's enough liquidity and some of the killer apps are coming to it. And I think that flywheel can start. And so ever since January, when I first wrote that, we've had a doubling in Lightning capacity in terms of how much Bitcoin are on that network. And I think I think looking back 5 years from now, I think the Lightning Network is going to be a pretty big deal.